All right, everybody, welcome back to the Skive Off Podcast. I am Rod Hullaby. Thanks for joining us. Today, Shannon Moore is joining me. Shannon,
Hi.
I've known for a long time. She is a lender and wanted to have her on right now to kind of walk us through what it takes to get approved for a loan for a house, some of the misconceptions, and what you can do to kind of help yourself out. Shannon, thanks for joining me.
Hey, thanks for having me, Rod.
I want you to tell people about your background, kind of what you do and where you're at right now.
I have been a mortgage lender in Cedar Rapids for roughly 28 years. I know that's aging me completely. I've been with a few different companies, meaning being with a bank. I've been on the broker side. I've been on the retail side. So I feel I have a pretty good knowledge of all the different types of lenders that you can go with and use for mortgages. I'm also a licensed real estate agent, so that kind of helps with everything with clients as well.
So exactly what is a lender and what role does the lender play?
So we take a look in depth at your credit, and we also take a look at your income and how much you can actually afford to pay for a home. I know rent is ridiculous, and people are commonly saying they're paying $1,800 a month in rent, but I can only afford a $1,500 house payment, and they wonder what the difference is with that. So I try to explain to the best of my knowledge how and why the differences are with rent and actually owning a home.
Kind of what are the differences between that and as people are looking at it, where they should be or where they would want to be?
Sure. With renting, they do just a simple credit check, and they don't really account for a lot. Or if you have a roommate, maybe that roommate's not on your loan application, so that income would also count being a rental income. They don't have the same guidelines as conventional or the government does, Fannie, Freddie, Ginnie, on who we're actually borrowing the money from to lend to you as a consumer. So the guidelines are just way different when renting versus buying.
Okay. So what is the difference between a bank and a mortgage company? Is it the way they do business? Is there the approval different? Maybe what's needed to be approved different?
Sure. The guidelines are always different with different companies. A bank may not have any outside investors, and they may set up their own parameters for loaning money out, whereas a retail bank, we have several different lenders, and we can choose who we use and utilize to go for different guidelines, such as debt to income ratio can be higher. Some banks cap that at a certain amount, and other banks cap it at a different amount. So it really, you can get different answers when you contact different banks even. You may get 2 different answers or 3 different answers depending upon who you speak with.
Are there like certain criteria that each one have to follow, or is it just kind of what they set is what they're going to do?
Sometimes companies set what's called an overlay, meaning that's their perimeter. That's a hard stop for them, even though it's allowed. So, for example, FHA, most lenders only go down to 640 when FHA allows you to go down way further than that. That's just a parameter that bank or that lender has set. And so those are what a lot of banks follow, is those harder overlays.
So if somebody's looking, say, we were talking about renting and buying, is there a threshold where maybe they get to that they say, okay, maybe it is a good idea for me to look at buying instead of renting?
Sure. I think anytime you're paying over $1,500 a month, for sure, you should really look at buying. $1,500 a month is a pretty big chunk of change, and you can probably afford at least a $140,000 to $150,000 house with that. So, and that's probably what you're renting as a single family dwelling. And you're paying that, so you might as well be paying yourself and earning equity instead of paying a landlord's equity.
And so as I'm looking at making that move from renting to buying, are there some baseline things I need to look at or questions I should ask as I'm starting to make that decision?
Yeah, really look at your budget. I don't know your budget. I only know what's reporting on your credit report. And those are credit cards, any installment loans that you would have through any financial place. I don't know what your daycare is or what your insurance is for your automobile. If you have a private owner for an automobile and making some payments that don't report to a credit agency, those are things that I'm not. When you go to buy something from Amazon and it's like $1,000, you can set up those Afterpay. And
Okay.
so those affect your credit, those affect your debt to income ratio as well. But those are something that I don't have access to. So we have a small portion of what we go off of. You have that other portion that you have a hard stop. So that's really a hard conversation to have with some people, because people don't write down their budget and they don't understand where their money's going. So when you have that discussion and really show them and break everything down, it really does turn a light bulb on with some people.
That's something that most people probably don't look at, probably aren't aware of. So kind of walk us through a credit report and what you're looking at that maybe the average person, when they see it, isn't looking at, that might tell them signs that, yes, you would be a candidate to get a loan, or
Sure.
no, you wouldn't, and something that you might need to look at and work on.
Collections is a huge thing. Typically, if you have over $2,000 worth of collections normally don't report a payment. So if it's over $2,000, we have to put in a payment for that collection. So $2,000, it's a 5% payment on that amount. So that would then go against your debt to income ratio, where you're really not making a payment at any point in time on a collection unless they're garnishing your wages, or unless you've gotten to court and they have a judgment against you. That is one thing that people, kind of glaze over. They think it's just an old debt. They don't have to worry about it. More so now, it used to be where that debt was old, just leave it alone, don't pay it off, because if you do, it brings it current, it might bring your credit score down. The creditors are getting wise, and they're reporting it, and they're reaffirming it. So that debt's just never going to go away. They used to fall off after 7 or 8 years if you would just leave them alone, but now they're reaffirming that. So that's a huge thing to look at. Another thing is your credit score on what you're looking at on Credit Karma or Truly. All your free apps, your bank apps, are not going to be the same score that a mortgage loan officer pulls. That's more of a consumer score. Ours is actually a mortgage score. And we pull all three, TransUnion, Equifax, and Experian, and we go off of that middle score. So they take the highest and the lowest and go off the middle.
Okay, so how often would you say people who would need to look at their credit score, or how far in advance maybe from looking to get that, go look at a home, to purchase a home, should they be looking at that credit report?
I would say if your scores with Credit Karma or the other apps are 680 or below, definitely look at least 6 months before. So if you do have to fix your credit, you have that time to fix it. Because a lot of the down payment assistant programs, they require a 640 credit score. So if you need that money to help with a down payment, you have to qualify through those state agencies. That's not something that anybody can override.
Okay. So now I've got my credit report, and maybe you see something that's on there that's going to negatively affect me. Is that a conversation you have with the person, or do they have to go somewhere else?
No, absolutely. I go over their credit score, how they can increase their score. I send them a very detailed email So that way they have it in writing and they always can refer back to that email. Because it is important for people to understand how to fix their credit. Nobody's perfect, and credit is so hard. It's so hard to ruin, and it's so hard to get back up to that score that really creates something, a loan that is feasible. And, again, the grant programs do require that 640 credit score.
So I've got a good credit report. It's getting pre-approved. Kind of explain the importance of getting pre-approved and how that can help the process along better than maybe looking at a house, saying you like it, and then having to kind of go back and, I say, kind of start from the beginning.
Yeah. So getting pre-approved is really, really important because it puts you then in that price range. When I pre-approve somebody, I go over a few things with you. What payment are you comfortable at? It doesn't matter what I can approve you for. What payment are you comfortable at? Because if you're comfortable at a $1,500 payment and I'm saying, with your credit report and with your ratios, I can go up to a $2,200 payment and you're not comfortable with that, then let's go over the $1,500 payment. But you just went and looked at a house at the payments, say $2,500. Now what do? Now you fall in love with that house and realize that you don't like the payment and you don't want the payment, or you just don't qualify for that payment. So it kind of sets you up for failure when looking at houses and not knowing what your budget is, because it's hard to say no when you're a loan officer and somebody's in love with the house. It's hard to tell somebody no.
So you talked about getting comfortable with that, being comfortable with the payment that you're going to have. How does that play with getting the pre-approval, and do you kind of like translate the monthly payment into a total value of the home, or how does that work?
Yep, I back into a payment. So I'll look, so if somebody tells me that they're comfortable with a $1,500 payment, I'll look at houses different, and I'll give them an example. I'll say, here is a $150,000 house. These are what the taxes are on this particular house. Homeowners insurance, we're going to kind of guesstimate that. And then I go over that payment with them. And I break it all down with principal and interest, the down payment amount, what the property taxes are on one particular house. Taxes here are just really, they're a huge thing because they're different all over. You could have a $150,000 house with $3,200 taxes on one side of town and a $150,000 house on another side of town where they're $2,200. So those definitely play a big piece also in your payment.
So now I've got the pre-approval. I'm going to go look at a house. What's your role at that point?
I am here to answer any questions that you have about what would my down payment be. I have a lot of people that will send me the house that they're going to look at prior, so I can send them what the payment is. I can pull those specific property taxes for that property, and I can go over what that payment looks like for them, so that way they know before they go and see the house.
Do you have any part with that, or is it not until they actually buy it?
It's not until after they have an accepted offer. After they have an accepted offer, that's go time for me. When I pre-approve somebody, I do require a few things. I require income documents, such as pay stubs for the last 30 days, and at least 2 years of W-2s at bare minimum is what I require for somebody to bring to me before I will say, yes, this is the amount that I can pre-approve you for. So after you have an accepted offer, you and the real estate agent have to set up your inspections. Those are really huge. Then a homeowner's insurance quote, you have to get that within 10 days, and that's per the contract that you signed. Any additional income documents, bank statements, and just your assets. So once we have a full offer and purchase agreement, then it's off to underwriting, then it's off to getting your loan fully approved, ordering an appraisal, which is typically required on all types of loans. Sometimes you can get a waiver if you're putting a lot down. If you're putting over 20% and it's a conventional loan, typically you can get an appraisal waiver, so that means you don't have to have it. I would still probably recommend that you do, unless you're trying to close within a week or a week and a half. Sometimes, depending upon how busy appraisers are, you might want to forego that. But
Okay.
so it's just putting now all the pieces together and getting that to the final line.
So that's someone who's perfect, everything. And we talked a little bit about if you have bad credit, and you hear things about, oh, do this to improve your credit, do that to improve your credit. I think sometimes those are just the people selling the program. It's good for them, but it may not necessarily be good for setting yourself up to get approved for that loan. So
Yeah.
kind of, can you speak to a little bit about, if you do have bad credit, what are the things you can do,
Sure.
or maybe even just to establish credit that can help you out if you're looking to purchase a home?
So people have credit cards come with a bad stigma, right? Unless you use them properly, meaning you don't overcharge on them, you're not over the balance of your available credit, you stay under 30% of the available credit, that helps your credit score. If you have 5 different credit cards that are all maxed out, that hurts your credit score, because it shows that you don't know how to budget, because you're always charging on a credit card in order to live. Or, and maybe it's not that you're living, it's maybe you're just buying bigger purchases than what you have afforded for. So that's what the credit looks at is your credit utilization, how old your credit is. When my daughter was 16, I actually added her to one of my credit cards that had been open for 10 years. So it gave her a great credit score within 3 months. And,
Okay.
She didn't have to do anything. She just was on my credit card as an authorized user. And I kept her on that until she had generated her own credit. So that way she kept that score. So
So that's good. So just kind of staying, basically living within your means, and just making sure that you're keeping an eye on what's out there seems like to be the plan to kind of get your credit where it needs to be.
yeah, yep, exactly.
So what are a couple, 2 or 3 misconceptions that maybe you've come across that people have about getting approved, that, maybe their uncle, brother's cousin told them from an experience they had that maybe makes people a little afraid or nervous, that you felt like that's just not true?
You need 20% down is a huge misconception still. I don't know how many times I've heard I don't have enough in savings. We don't have really anything to put down. That's where the grant programs come into play. You don't need 20% down. You don't need perfect credit to buy a house. Another big misconception is, I'm only 20. I've only been on my job a year. I can't buy a house. That is also, I've closed in the last 2 years probably more loans for 20-year-olds than ever. And that's very impressive when they do come to you and their credit is okay, and they understand that buying is way better than renting for them. So it's very impressive. Actually, Monday I just closed on a house with a 20-year-old, and that's I not even his mom and I was proud of him.
That's where you buy the house and help your roommate take care of your credit.
Yeah, you buy the house, and these kids do have roommates, and they do have people move in and that help them with everything. And just some of these kids are very handy too. They're fixing their own stuff. They're doing the DIY projects that nobody wants to do. Nobody wants, I'm old. I don't want to paint. I don't want to paint a house. God, I don't want to paint. And
I'm
they're
a horrible
doing.
painter. Just ask Jan.
They're the ones that want to work on the house. So age is a big factor in a misconception. Down payment, perfect credit. I don't, yeah, those are about the three biggest ones that I can think of.
So you mentioned grants and things like that. Are there places where people can go to kind of see what's out there? Or is that kind of more of on your side where I come to you, I kind of tell you my situation, and maybe you ask some questions and you're like, oh, hey, we've got these opportunities for you?
Yeah, because there are different grants for different tax brackets. The city of Cedar Rapids has a great program. It's the Roots program. They're new build houses, and they can get up to $35,000 down. And the way they calculate your income is different than how I'm going to calculate it. So definitely I can get people in contact with them. The Iowa Finance Authority is a great online place to go also. That's who I utilize for a lot of my first-time home buyers. And that's the grant that, it requires a 640 credit score, but they have all the loans, FHA, VA, USDA, and the conventional Fannie and Freddie. So, but that minimum credit score is a 640. And then they help with that down payment. And that's online. You can Google that. I tell people that I would prefer to go over the programs after I pull your credit, because there are so many different programs. I want to make sure I explain the one that you qualify for. And if you're close to qualifying for another one that's maybe a better down payment program, then I go over that with you. To just Google and to just try to look stuff up online by yourself, very overwhelming. Let an expert help you, let them guide you, and let them know, because we know the guidelines. We've been working with the guidelines, and I can direct you so you're not overwhelmed with information, because these loan products can be very confusing if you don't know. And you're looking at 5 different ones, and it's like, okay, calm down, slow down, let's back up and let's go over the ones that you do qualify for.
So what's the best part of your job?
Dealing with people every day.
Of course.
You know what? I really do enjoy helping first-time home buyers. It warms my heart to see them just proud of themselves, especially when they just felt like nobody listened to them before, and so many people turn them away or turn them down, and it just warms my heart to see them get their first set of keys. That's again, proud mom moment, and they're not even my kids.
And how about your relationship with realtors? I know kind of you have to work hand in hand with them. So how do you foster those relationships, and kind of how do you kind of create new ones and keep the ones you have? Because, you're not, although you're the best, you're not the only lender out there that.
It just being in contact, staying on social media, sharing open houses. I work with a plethora of real estate agents, and all the agents that I work with, they're wonderful. And most of the agents I know love their job. So I make sure to share everything on Instagram, Facebook, whatever I can. I stay in contact with my agents if I have a new program come out, and maybe one of our past clients, hey, this might fit so-and-so, let's try this. And just because, again, there's always new programs coming open and coming available. And the market's ever changing also. I think, our New American Funding, we were discussing today how there are some of these houses on the market that have been on the market that just need a little TLC. We have a program for that. It's a 203K loan, meaning you can borrow the funds to fix it up, whatever it is, as long as we have a contractor and a bid, you can add that into the purchase price. So, those are the products that we're reaching out to realtors about, because that'll just help their business on the selling side, and it'll grow more buyers, really.
Okay. So you kind of mentioned it, our little corner of the world here in Cedar Rapids. So what have you seen in the market over the last 3-6 months to the year, kind of, and how easy or how hard is it for you to notice trends, and so that you're kind of staying on top of what's happening rather than maybe having to react?
Sure. Daily I get a rate email from Barry Habib. It's called MBS Highway. He goes over the 10-year treasury bond. He goes over a lot. It's overwhelming information, honestly, if you're not in this business, to just kind of look at and you're like, what in the world? Oil prices, that has a lot to do with right now. Just inflation in general has a lot to do with our interest rates. The Fed chair has a lot to do with our interest rates and his outlook on everything. It just staying knowledgeable. I have to stay in front of it, and I do that because that is my job. And I have to educate people on the market. And are rates going to go down anytime soon? It's not likely to see interest rates take a big dip. Just with everything going on with Iran, oil prices, and everything. So it's just staying on top of things. Here, we're steady Eddie here. We didn't have the big crash in 2008. Yes, we had a little bit of one, but our values have stayed pretty consistent, and it's a consistent 3 to 5% interest, raise every year in value instead of Arizona, California, New York, where they were 20 and 30% going, increasing in value. Here, it is more conservative in Iowa. Definitely. So our situations with real estate are going to stay pretty consistent, and the values are there. The rates are where they are. So as a consumer, we just need to, figure out if buying now and paying a little bit of a higher interest rate for a house that you want versus renting, it's just education.
What do you look for in a good lender? What separates a good one from the other ones?
Communication. Are they available when you need them to be available? I'm not in any way saying that a bank is bad, because I worked for a bank for 11 years and I enjoyed it, but I took my work outside of business hours all the time also. All my clients had my cell phone number, just because that's the way we do business, right? Our real estate agents have our cell phone numbers because we are not 8 to 5 people either. I work when my real estate agent works. So if my real estate agent and my client have a question at 7 o'clock at night when they're putting in an offer, I'm certainly going to try to make myself available as best as I can. And, that's important, because not everything works from 8 to 5 or 9 to 5. I expect you not to take any time off work to go look at houses. I want you to do it after hours, but that means that I'm accountable, or your loan officer is accountable for any questions that you might have while signing that purchase contract. It's a big purchase. That's the biggest purchase you're ever going to make. And, you want to be sure that that's the right thing. And so and their communication style with you, if they make you comfortable, I guess, again, availability is probably one of the biggest things. I don't mind doing that. I'll answer a question for agents. If their borrower has a question and they can't get a hold of anybody, I'll step in, because, again, happy buyer, right?
Right.
A happy buyer is a happy buyer is a happy buyer, no matter who the lender is.
You've gotten 10 people approved, because it can be stressful, maybe trying to get someone approved for a house and either their offer doesn't get accepted or their credit isn't good enough. So now they've got to go down this plan. So how do you kind of unwind, get away from that to kind of make sure it's not grinding on you?
Well, I started, I just started working out about a year and 4 months ago. I work out every morning at 7 a.m. And that really is a stress relief, 6 days a week. In the summer, I like to get on my bicycle and ride. That is also just, this town has so many bike trails and so many trails to walk on. Mount Trashmore, I try to walk up that every night when it's not 108 degrees outside. I'm not burning up to go walk up Mount Trashmore. I'll do that next week. Normally RAGBRAI is fun. So just activities. I like to be outside. I like to be busy. I like to be doing things. So
anybody that knows you knows you are a massive fan of a certain NFL team.
NFL team, yes.
And a certain baseball team. What NFL team is that?
Baseball team is the Cardinals. Actually, I'm going to a game on Thursday.
Where'd your love for the Cardinals come from?
Actually, my grandma, her sister lived in St. Louis, so I spent every summer down there from the time I was 8 until I was 13 with my grandma and her sister and all her family. So I still have family down there in Arnold, and so once in a while I'll pop in and we'll have a dinner or whatever. But so that's where Cardinals came from. Baseball.
I grew up in St. Louis, so I'm a Cardinals fan.
I love St. Louis. It's one of my favorite towns. There, did you see they got new elephant babies at the zoo?
Yes. The St. Louis Zoo is the best zoo in the world.
It is.
Every time I go there, I don't care if it's summer, winter, I have to go to the zoo.
Yep.
I don't care if none of the animals have changed. It's the best.
You've been there recently. Have you seen the new penguin enclosure and all of that since they've redone it? It's amazing. But again, those new elephants, the babies are so cute.
Because I remember growing up in St. Louis, the guy who was in charge of the zoo was on a show called Mutual of Omaha's Wild Kingdom. He was the host of Mutual of Omaha Wild Kingdom, and it was just like he was the guy at the St. Louis Zoo.
The science station is actually amazing. Hey, go Jordan Walker. Go Jordan Walker. Home run. Yes.
So what do you like about baseball? I mean, I think you go to a game in St. Louis, and of course I'm biased, but it's just an atmosphere that it's so hard to explain.
The stadium is absolutely beautiful. The people are really nice, and just around the stadium, they've built it up. I mean, there's bands playing. It's hard not to get in a baseball spirit. Yes, baseball on TV, it's kind of hard to watch sometimes. Baseball in that stadium, it's not hard to watch, and it's not hard to stay focused. The fans are fun. Definitely.
And I just remember, like, so many fans are like keeping score on their scorecards. Like, that's how diehard Cardinal fans are. Like,
Yeah.
and I never really understood it. But when I was a kid, a friend of mine, we would go to the games and we would like record ourselves announcing the games, like Jack Buck and Mike Shannon, and we'd have our scorecard. So tell me about your NFL team and where this love of the Steelers came from.
Yeah, the Steelers, black and yellow, so that was kind of easy, right? My ex-husband wouldn't allow us to watch any other football team, so I got pushed into it. I stayed, but that's okay.
And you're probably the one person I know probably gets the most excited when the schedules are announced, because you're just automatically plotting what road games you're going to be going to. It's like, and it's like the schedule comes out on the Tuesday, Wednesday, you already know what away games you're going to.
Correct. That's correct.
What is it about going to those games that's so fun?
The Steelers, the fans travel so well that most games, even if it's like in Indiana, the Colts, it's like the Steelers overtake the stadium. I went to the last Rams game in St. Louis, and it literally was 85% Steeler fans and 15% St. Louis Rams fans. It was absolutely crazy. So I just the camaraderie. Steeler fans are crazy, but they're fun.
Were you always a football fan?
Kind of. I was a sporty girl, so I played sports. I wasn't the cheerleader. I was in basketball and track and softball. So I watched football, but not, you know what I mean, not as aggressive as I did.
And that, unfortunately, is where the episode ended. Due to Rod making rookie mistake 1, not making sure his laptop was plugged in, or that it had enough power for the episode. Still gonna put it out. You learn from your mistakes. I want to thank Shannon for coming on. A lot of great information for those people looking to purchase a home. I can't thank her enough for joining me. Can't thank you enough all for joining the Skive Off Podcast. Catch us on YouTube, Spotify, Apple. If you have any comments, leave them below. If you have any suggestions for guests, That's what the show's all about, is listening and talking to different people with different ideas to learn more about each other. My name's Rod. Thank you for joining the Skive Off Podcast.